How to get a small business loan with bad credit, no collateral necessary, no hard credit checks, and even no interest rates. Stick with me until the very end of this. You're going to get all the juicy details that you must know if you want to get a business loan with bad credit and other contingencies. But before I get started, my name is Michael from Viral Funding Solutions, and I come out with content like this on this channel, on my blog, and all other places. And I speak about all small business loans, cash advances, building business credit, and taking advantage of different opportunities. So if you have not subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future videos I come out with. Let's get right into this. So I am a business loan broker. I also help out real estate investors get the funding that they deservedly need. And so I'm going to set your expectations in this video. I'm going to take a different approach. I know some other videos may show you the programs to go and apply, and I have other videos on that are similar. So I'll link to those down below in the description if you want to see more specific programs with bad credit, as little as a 450 plus FICO, where you can get same day instant approval funding with minimum qualifications. But this video is going to serve an even greater purpose because I want to look at your expectations. I know they're up here, right? You're thinking, well, I've been declined by the bank, or if I try to go there, I know it won't work. I've tried to reach into my savings. Maybe I've done it already, or I just don't want to continue doing this at all because I want to save it for a rainy day, a vacation, kids' college tuition, etc. You can't turn to friends and family for help anymore. So I have the solution for you. Fortunately, we're going to go through this, but our expectations are up here. And so are the banks, so are the SBA loans, right? The EIDLs, all SBA types, the EIDL grants, etc. Maybe you've tried getting a PPP, you have one, maybe you don't, and you're trying to consider other routes, right? I've been in your shoes. I know the feeling of getting denied. I know the feeling of going from one place to the next, not sure if you should take an offer here or there. Is there a better one out there? So I'm going to clear this up for you in this video. So to get a small business loan or any business loan of any magnitude online with bad credit, these are available, and especially with no collateral, no hard credit checks, and even no interest rates. And I'm going to get into that a little bit at the end, so make sure you stick with me to find out how. But bad credit doesn't necessarily mean you won't get funding. It just restricts to how much you can get. What can you get approved for, if anything? There are programs out here that just do personal credit checks. FICO is what we look at. So for the most part, you're going to see personal FICO credit score checks. And if you're somebody who's like, well, I don't want to have that, I don't want to have some type of a personal guarantee, which comes with just about all of them, then there are alternatives. I mean, the banks, possibly. The other way to do this is to go through in building business credit. And if you need help building business credit the right way, I'll leave a free video series down below, as well as if you need to get in contact with me, this will be the best way. Because listen, at the end of the day, you try to go through these other online marketplaces, you try to search, they don't have your best interest at heart. They either don't show you the best options, they do, but they don't give you enough information. It's not personalized and customized. So if you want a greater approach from somebody who's going to break down the numbers and go through it comprehensively, show you your options and the best ones, and where to go and apply, and what I recommend you do, then there'll be a contact form down below you can submit for business funding, and even if you're in real estate as well. So make sure you go there. But doesn't necessarily mean you won't get any funding. It just, again, means you are restricted. So when we look at FICO credit score, we're asking ourselves, what is your payment history look like? What is your utilization ratio? What is your debt to income? We're looking at so much. And if you're out of this like little bubble where we're saying, okay, you have good FICO credit score, or even if it's bad, but you're making payments on time or something, you know, you're on a better projection. At the end of the day, we're looking into all this and seeing, okay, well, if you're not making enough of your payments on time, maybe you are, but maybe you're just extending something where you could have paid it off sooner. And I always recommend you do that. And different cards and different things will have different utilization. So 30 to 35% or so. Make sure not to go over. And then keep your debt to income ratio down. That's why there's these personal loans that exist and some other ones to go for. But yeah, it just means you're restricted to how much you can get. So for example, I always like to do this with everybody. It's kind of a quick exercise. So let's say you do Let's say you do 50,000 per month. Now, I know some of us may not be there. Most of us here watching are less. You're like, I can't. Or you are in that range, there or above, more or less. It doesn't matter. The thing is, if you're doing 50K, for example, in this one I'm going to use, and you're asking for 100,000, okay? And I get these submissions every single day. Again, guys, I help people out with this on a daily basis as my expertise. I know all types of services. I know all the lenders. And this is another reason why you want to come to people like me, brokers who know how to match you with the right lenders, not just to go and apply and say, okay, well, this looks like an okay offer. I mean, I don't know about this one. I haven't gotten anything else, so I'll just take this one. Or you don't end up taking anything at all. That's why you come to somebody like me, especially with myself. I have great connections with our underwriters and our lenders, very good personal connections. And so I always communicate. We always sit down and talk and look things over. But you have to understand, like 50, if you want 100,000, but yeah, you have a 550 FICO. I said at a minimum, you can get in with 450, and that's just a certain service where we can get you up to 25,000 same day instant approval. I'll leave more information on that down below in the description so you guys can view that program. But the problem is, if you're doing 50,000, we look at first in those bank statements, most of the time we look at 3 months, sometimes 4 to 6, depending on the lenders, and also depending on the program, depending on how much funding you're looking for. So sometimes if you're looking over 100,000, we might need a years of tax returns, maybe, not all the time. Sometimes over 250, we ask for more bank statements and more financials just to verify the proof of income, how much profits, right? And then making sure there's really like no fraudulent activity and doing all this stuff that's going to benefit you. But I won't get into the specifics of how or what documents to expect. I'll talk a little bit about that at the end, so stick with me. So 50 you're doing, and we're looking at within the last 3 months. If we're doing that in 3 months of bank statements, are you around 50,000? Do you have consistency, consistent cash flow, revenue-based is a lot of what we look at. And so before I get into it deeper, there are the 3 C's. So we have collateral-based type of funding, we have credit type of funding, and then we have cash flow. So collateral, some type of a secured business term loan, maybe it's an SBA type where you're being asked for collateral. Equipment financing can be that, against the equipment, real estate, or whatever it can be. And then there's credit, where we have a high emphasis on credit. So like personal loans, it can even be an SBA loan. SBAs have usually these 3. And then cash flow, right? We just look a lot at revenue, and we can disregard the credit score, but we still have a minimum we want to meet. And there's a different category for how much funding you can get. So stick with me here. And I have content on this I've released that I'll leave down below. But 50,000, you want 100,000. Your credit score here, let's say, is 550. We're only requiring you to have a minimum of 500, and that's poor. And you're thinking of it like, yeah, I have a 550. I'm doing 50,000 around there per month, or I'm doing 50, 60, and then 70. So that looks better. Or I'm doing 50, around 50, right? It's more or less, or 50, 40, 30. Your months probably increase, or they just decrease. And so that has a lot to do with it. It's the projections, the consistency, the amount of deposits. Usually we like to see 3 amounts of deposits per month. The more the better. One big amount as opposed to multiple, maybe little amounts or even more. We take the multiple ones. That's best. And it just shows consistency. The amount of bank balances that you have at the end of the month, the starting balance, the amount of deposits, again, the types of withdrawals you're making. And then there's so much involved with that. So I just didn't touch upon all of them. I just touched upon it briefly. But those are little aspects we look at. And so when you are not happy with an offer you get, it's on a deeper level. And I haven't given you everything, like all the underwriting guidelines, and there's a lot more that I have other videos on. I'll link to down below. But yeah, if it's 50, 100,000, you want to do 550, that credit score isn't looking like we can give you that. We look into it and we say, okay, you've been making recent payments, how big, how small, what's your utilization? And it just helps us determine, like, will you be able to handle these payments? You might think you can, you might think you deserve 100,000 just because a program tells you can get that much. Problem being is this credit score over here doesn't tells us a different story. And it's not only the credit score, it could be the time in business, the revenue, something's happening there. So taking all this into account, like how much can you get? Sure, we say 50, we can give you 1 to 2x or 100 to 200%, in other words. So we can get you close to 100 with that, maybe not. It doesn't look like it with the 550 and with other things. We might just get you even 50,000 or maybe less than 50,000 because of everything we're looking at, right? It's not just because it says it's this. Yes, if you have great financials, you have great history, you have great bank statements, then we can get you funding more or less within that category. So it's one thing to understand that your credit history does play a big role in this, And then another thing too is to understand that you don't need to put any kind of collateral. So that is the upside of this. And I'm going to get into a little bit quickly on interest, not touch upon it too much, but collateral, you don't need to put any kind of collateral. If you go to a bank, some kind of equity, you got to put some kind of real estate in, or other types of online banking, or some other types of private lenders where they were getting that, they're asking you to put that in if it's a secured business term loan, SBA, et cetera, equipment, et cetera. But you just have to know that the benefit is you don't do that. You don't have to put that in. And the other thing too is you have to look at interest. And I know that's on the top of your guys' mind, because I always get asked that question. It always seems to be the first thing we ask, like, what is the interest rates? And I know the problem that comes with this. I know the feeling of running your business, have multiple ones, and trying to get funding. You've been shut down. You don't have the right amount of monthly income, and that's what's happened with me before. And so it's like, where do I go? Do I start building business credit? And that's what I did for a good amount of time. So I get it. I've been in your shoes, and it's not easy to do things. But the better the credit score and your revenue, the better offering you're going to get in total, as well as time in business. And we look at other things in the background, like non-sufficient funds, any negative days that usually disqualifies you, negative days within the last 3 months, background checks, delinquencies, and there are more things involved in all of this. So you have to be considerate of what you're getting, as opposed to what you believe you should get, and our expectations. So the credit I already talked about. The better, the more. Like, for another example, we categorize types of bad credit. So if you have anything below a 625, we're talking about interest rates. In this example, I'm going to use what's called the total payback, but in a way it can be similar. So if you have a lesser credit score, it might give you a more higher interest rate, right? It might be more medium to high, and that's not something you are fond about. Of course, none of us are. None of us are going to be happy with the type of payments we're getting, or always the type of interest rates, or the type of the term we get, how much we have to pay back. But what I tell everybody at the end of this is, yes, I get that. And then two, you have to look at it from this point of view. Does the benefit exceed your repayment? Does what you're going to be putting those funds for exceed what can be in costs, inefficiency within returning that amount? And then the terms, and then maybe the types of payments, if they're daily, weekly, because we don't always get monthly payments. You have to understand that these are daily, sometimes weekly. If you can move into weekly from the beginning, we have all types of, we have like business loans and a lump sum. We have lines of credit. And there's so many other ways you can go about it, but it's what you qualify for. And if you qualify for more than one, what is the best option? And that's why it's always the best option for you to fill out that funding form down below, because I will analyze and I will give you, and I'll evaluate and give you a proper response via email. So make sure you look for an email response back from me when I look at that. So yeah, you have to take into these things into consideration, that if you have a greater revenue, for example, if you're doing 50,000 plus per month within each of the last 3 months, if you have 2+ years of business, if you have a 700 plus FICO credit score, and it also varies on the industries, but if that's for the most case, you're considered an A paper lending client, meaning that 1 to 2x we may be able to get you will be a lot closer. So if it's 50, we might be able to get you as close to 100, if not 100 or so. And it's a bunch of other factors that are in play. And so that's an A paper lending client. Those are good things we have for funding details. Anything below BCD, et cetera, it could be like 625 with a year in business, less than 2 years, just doing 20,000 plus per month. And again, I just said 625 on credit score. If you're doing like 550, you got to take the good with the bad. And sometimes what I tell people is, if you can take that funding and put it to use, why wouldn't you? A lot of people, they think, well, no, you gave me this offer. And I get this every single time, guys. I get people who are like, no, my expectation, we maybe talked about it before or after. And I say, well, what was your expectations? Well, I wanted to get 30,000. I was only offered 20,000 or something like that. And then I come to terms with the person and I communicate this with my underwriters, my lenders, and I'm like, well, considering that maybe you have more loans than one, right? And then you have this type of history with credit, and then this shows up here, there is no way you're going to get the full amount you wanted. Perhaps if you hadn't taken any loans previously, we would have given you something close or right next to it. But given all the details you've provided us, loan history and stuff like that, that you're currently paying off some other ones and you're in a different position, then we can't give you as much. It causes a reduction. And we're seeing over here what these lenders are giving you and why they're giving it to you. So even without the loans, you have to understand that there is a place for all this. So kind of almost to wrap things up here, the interest rates, if it's a total payback, so sometimes we calculate total payback, factor rates, interest rate APRs, all this stuff, but it depends on the service. Some are less expensive than others, some can be more. And so to get a small business loan with bad credit, you are already looking at medium to high interest, especially if you've never taken out funding before in the past. Why would a private lender give you their money with the expectation that they believe you're gonna pay them back? Sure, we say that, but do we actually do it? Sure, some of us here watching have been like, yeah, we can, and I've done it, but not everybody. And so, and you might have already done it, but you might not be in a position in the future to do it. So it's all about building a relationship and a rapport with the lenders, with the underwriters, with myself, the brokers, etc., because that opens more doors. Let's say you don't get everything you wanted at once, but you can take out what you have. You can take what you have, pay it back as soon as possible, at least 50% of it. We can try to look at refinancing, giving you more funding. Maybe in about 2 to 3 weeks, in those 2 to 3 weeks, we can get you some more funds on top of what you have. If you need more, come back, receive funds time and time again. This time, you probably get better rates. You drop the rates, or the payback, etc., and we can increase the terms or leave the terms or get you more funding, maybe in time move you into from a daily to a weekly, sometimes maybe monthly, but depends. So you got to look at this as a relationship building. And if you're not in it for the long run like that, then you might as well not even get funding, because if you're going to complain about an offer you have, and I always tell people that, communicate it with me. I don't know if I have you coming in through an application as your broker / agent, but you don't communicate with me what your offer is because you don't want to share. I get sometimes that is the case, but I don't have an idea of maybe what I could do to improve it. Maybe there is something better. Maybe there isn't. A lot of the times, usually it's spot on, but I can analyze it again with the offer you're given if I don't see it firsthand and be like, well, yeah, this is the reason why you've been given this. So kind of again, to wrap things up, there's a lot of factors that come into play with getting a small business loan, a business loan of any magnitude with bad credit. Even with good credit that you have, it doesn't necessarily mean you're going to get the best amount or what you're asking for. There are different services where if you're not doing like 20,000 plus per month within each of the last 3 months, you're doing below that, but at least doing 5,000 is what we look at per month within each of the last 3 months, then we can qualify you for up to 75% of that. And I can break down some numbers for you on what it would cost, but I can't give you an exact total payback. If it's cash advances, a lot of the times it's like 1.19 to 1.69, depending again on the service. It can be 1.19 to 1.49, and your lending details has a lot to do with this. So for that example, 550, 50,000, you want 100,000, might not even get you 100,000. Realistically, closer to 50, even less than 50,000 because of your FICO. Maybe you have the time in business. Maybe you don't have the time in business, so that will also reduce it. But we got to start somewhere, and we got to take what we can get if it's necessary, because that's what you can get in a lump sum. Now, if it's not a lump sum you want to withdraw funds whenever you like, a business line of credit would be helpful, as well as other sources for cash flow purposes. You can use it the same as like lump sum, but there are different contingencies and things that come to that. But no collateral is required. There are personal guarantees a lot of the time, but that's okay, because if you were to default, the lenders want to make sure that they can collect their money back in some form. If it's not the full cash, how do they get it back? So personal assets in cases is the way to do it. And don't be frightened by that. What I tell everybody is to really sit down and think about what you need your funding for. How soon do you need it? Is it imperative for you to get this much? Some people, what they do is when they figure out that they get too high of a payback, and when kind of like interest, but not really. I like total paybacks, generally less expensive, excuse me. But what people do is if they even get qualified for, like, let's say this example, 50,000, you want 100,000, and you have a close to a 700, we'll say 700 or 680, you have 2+ years in business, excellent bank statements, or they're looking really good and sharp. We know you have good cash flow. This is going to help, and so much more that we look at. We go, yeah, we can get you 100,000 or close enough to it. Sure, here it is. And then some people, they go, well, then the total payback is going to be this much, or an interest rate is going to be this much, and I'm getting these types of terms, because you don't always get everything you want, right? You couldn't get it over here, so you are not always in the position to decide this is what I want. No, unless somebody didn't communicate it with you. With everybody I speak to, I communicate it correctly. So with that said, it's like, oh, okay, well, 100,000, a total payback of 140,000, and I get, let's see, 13 months, sometimes 4 to 24 months, sometimes it can be longer, 2 to 10 years, 5 to 25 years. It just depends on the service. And you can't always choose what you want. Sometimes you will have more than one option, but I'm going to communicate which one is the best one and for what you need your funds to be used for is really crucial. And so, yeah, with that said, it's like, oh, some people won't take 100,000 because they're like, oh, well, I got to look at the payback. Actually, let's start off at 50,000 or let's start off at 20 actually and work our way up. And that's what a lot of people do. And that's fine. You can always come back and get funds, build a relationship up. And that's actually an amazing thing to do because you build that relationship up with the lenders. They'll see your revenue and they'll be like, well, okay, I understand why you wanted to start here. Let's get you this. We can move you up the chain and get you better, lower the interests way more than what it could have already been. And so much more. But your credit score for a lump sum, you can start off at 450. And if you'd like to learn about that program where you can get up to 25,000 same day instant approval, and even with a 500 credit score, get up to 2 million plus incredibly fast within a day of approval, 1 to 2 days of funds deposited into your account, as much as a week, depending on the file, then look for that down below with no interest rates, rather calculated on total payback. You'll learn about those videos and what it all entails and the payback and all that. But that's going to conclude everything in this video. Hopefully you got value out of this and you understand that with a insufficient or less than desirable credit score, even in those good ranges at times, those fair and good ranges, it doesn't necessarily mean you'll get everything you need. You just have to understand the program. You have to understand our underwriting guidelines, how we look at all this from our perspective. Bank statements, if anything, we need to ask for more for if you require more funding. Then if we need to look at a year's worth of tax statements, okay, what do we do there? But it's not always like we're asking for that. And so just things like 3 months of bank statements for something, like I said earlier, maybe 4 to 6, et cetera, depending on how much you're getting funding for. And then we look for we have like 1-page applications, sometimes DocuSign, very quick, hassle-free, soft credit pulls. So it wouldn't hurt to go and try that out. All right, so that will conclude everything in this video. Look for all the information down below in the description. If you have not subscribed yet either, make sure you do that and click that bell notification icon so you do not miss any future videos I will be coming out with. Thank you. Bye.